Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond and it is Friday, August the 9th, 2019, a little after 5 a.m. in the morning, Eastern Standard Time. Let's get to what we're going to talk about today. First up is going to be the pre-market activity. Then we're going to talk a bit about members' stock chart request and our watch stocks. That's where we'll review symbols that our members submit for me to review, as well as the positions that I like as well, and which we may be trading in the coming days. So let's first kick things off with a note from our sponsor, TrendSpider. TrendSpider is the next generation in automated technical analysis. Please check out their website by clicking the link below if you're watching this on YouTube, or above if you're watching this on the blog. I will be doing a demonstration of their product in a few minutes during our watch stock presentation. And there's also a link below to a webinar that we'll be having this coming Sunday. I've been invited back on to discuss our trade in the USLV, where we made about 14% on that trade. And in fact, I will be talking about the USLV in a minute as well. So again, please click those links. Check out TrendSpider. If you like the product, use CT25Z as your discount code. Again, CT25Z. Let's get to the charts. All right, actually, before we get to the charts, let's talk about economic data coming out today. We had the Producer Price Index coming out today. That is the measure of the cost of goods, inflation at the producer level. In the news, you had President Trump, who pulled Huawei's license to do business here in the United States last night. It could have an adverse impact on the markets today. We're down slightly in the pre-market. And also expect an executive order to be signed, putting pressure on the big tech firms, the social media firms. And I've warned about this going back over a year now, that this was coming. It was a foregone conclusion. You mess with the bull, you get the horns when you're dealing with government. And now government is coming after these guys. And it's shocking how they are beginning to blow the goose with the golden egg with the opportunity that they've been handed, these social media firms. So more to come on that. Expect that. That's headline risk. I would avoid the Googles, Twitters, and Facebook of the world. All right, so let's begin with the pre-market activity. The S&P E-mini futures, we're holding support. Despite the escalation in the trade wars overnight, we are down, but we're holding support here. RSI still trending higher. NASDAQ, these are the 4-hour charts. These will all be 4-hour charts. The NASDAQ, same deal here. We broke out yesterday, a very powerful day. We pulled back, an orderly pullback on negative news, especially in light of the pending executive order on the social media firms. We're holding support. Now, the question is going to be, do we hold gains if we do turn green today? Generally, in a bull market on a Friday, you would expect to see short covering into the close. Why? It's because people are afraid. Those who are short, they're afraid of waking up Monday morning to positive news and them getting squeezed out of their position. So they lighten up in front of the weekend, especially in the summertime with light volume. And they'll reopen those positions on Monday morning. The question is, during a period of high pressure on the markets with a ton of headline risk coming from everywhere, whether it be the Persian Gulf, to the EU, to China, do traders lighten up on longs and hold their shorts into the close? That will be a tell with regard to the psychology of the markets as soon as today. Let's watch it. Let's keep an eye on it. Moving on. Again, 4-hour charts. We're watching the 10-year bond note. If it is rising, as it has been, a little bit volatile of late. Again, this is a 4-hour chart. It means that with this flattening out to within a trading range these past couple of days, you're seeing yields begin to stabilize. They have been down, as evident by the rising bond note. When the bond note rises, that means yields are under pressure. We are at multi-year lows on the 10-year bond yield, I believe going back to October of 2016. But we are stabilizing here within a trading range. And that's a healthy environment to be long of stocks when you have yields under pressure. Let's talk about the U.S. dollar. The dollar is very critical to our commodity trades. We are very long of the gold mining stocks. A weak U.S. dollar helps support that position, and that position has done really well. We'll be looking to add more in a pullback. And you can see that last 4-hour bar, we closed right at resistance. They attempted to break it out, and they were rejected this bar here at current. But this bar only opened up a short while ago at 5 a.m. Eastern Standard Time. It won't close until 9 a.m. Eastern Standard Time. So it's too soon to judge how this bar is performing. We want to see whether or not we are able to break out by 9 a.m. Eastern Standard Time. If we do, you could see some pressure on gold, silver, the miners, etc. If we break down, well, then you'll see a bid under those names. Speaking of gold, let's talk about it this morning. Gold continues to put in higher lows. Now, what I want to watch for here is a breakout to new higher highs or a breakdown below this lower band of support. Now, if the producer price index, which comes out this morning, comes out hot, meaning inflation at the producer level is hot, you may see pressure on gold. So just be careful here in advance of that release this morning. I believe that comes out at 8:30 Eastern Standard Time. Looking at silver, very similar setup here to the price of gold. We're looking for a continuation breakout. We are looking to build a new position in silver. We did book profits a few days ago in anticipation of a pullback, which occurred. And now we are looking to get back long yet again. And again, folks, I'll be talking about our silver trade and other trades as well on the webinar with TrendSpider. So please join us Sunday night if you're not doing anything. Just click that link below if you watch us on YouTube, or above if you're watching us on the website. Here is our triangle formation on a 4-hour chart. We're looking good here on silver. I like it. We're very, very bullish. And we're looking to buy. Taking a look at the pre-market activity of Twitter. Down slightly this morning in advance of an anticipated executive order. What these guys are thinking over there, I have no idea. They blocked the Senate Majority Leader's account, Mitch McConnell. Just incredible. The arrogance here is unbelievable. I've been saying these names are uninvestable for over a year now. And take a look at the price action during that time frame. Let's pull back and go to a weekly view. These stocks have done nothing. Now, I will say this for Google. On a weekly basis, we have a bullish key reversal on the week, which is nice. However, we need to see how the shares react to the anticipated executive order. We closed out the day at 1206.19, and we are down slightly this morning. Not much, though. Let's take a look at Facebook and these shares. Look at this over the past year. Nothing. A lot of volatility for nothing, unless you're a trader. If you were an investor, you probably got shaken out. You sold down here. And now you're dealing with, when do you get back long? You probably buy in at the top, and that's when they slap regulation on these companies, and it is coming. Now, on a 4-hour basis, we're trading down slightly this morning. So no panic here. But these companies are not showing the best judgment making with regard to how they're censoring conservative speech. And not even conservative speech. I know a lot of liberal people out there. They have podcasts, YouTube channels, and they're very liberal. But the censorship stuff is affecting them as well, and they're pretty ticked off. So that's for a different conversation. Let's go to the positions that we're watching for the coming days. All right, let's kick things off with the weekly chart using TrendSpider, which is the next generation of automated technical analysis. Let's talk about the ITB, U.S. Home Construction iShares. With all the negative news out there these past several weeks, the U.S. Home Construction is holding in there. And thus far this week, we are flashing an outside reversal week. Now, when you take a look using the automated trend lines feature, you can see that on a weekly basis, we have broken out. And you have RSI, which is rising, Stokes, which are rising. If we close out the week where we are now, we're setting up for a nice continuation breakout in the coming weeks. So ITB looking good on a forward-looking basis, assuming that we close out the week strong. Members will be talking about the ITB and other names on the week ahead commentary. If you're not currently a member of the Contrarian Trader, we have a 14-day free trial offer. We do a huge deep dive into the health of the overall markets, watch stocks and positions using video analysis of the charts as I'm doing right now on Saturday. That goes out to members only. So please take advantage of the 14-day free trial offer. Cancel at any time. So ITB looking very, very good. Now, UGAZ has been a name floating around in the forum as a position of interest. UGAZ is a leveraged ETF putting you long of nat gas. Now, yesterday you had nat gas inventories. It comes out every Thursday at, I believe, 10:30 Eastern Standard Time. No big gyration yesterday. This is a weekly view, though. And you can see that we are still trading down below the 20-period moving average, which has acted as a ceiling. Let's throw over some automated trend lines here. So we don't have any immediate support below. But one thing I am picking up right now on this chart on a weekly basis is that while we've been pressing lower, RSI has been putting in higher lows. Stochastics have been putting in higher lows. So what this tells me that while we still have pressure to the downside on price, the momentum of that selling pressure is waning. Now, it appears as though, given these volume bars to the downside, we still have some institutional players out there distributing shares. However, I will point out that you're beginning to see more and more rising green up volume bars. So this is a bit of a tell. Daily chart. Yeah, still no real serious support below. But again, what I'm looking for here are divergences, and what we're looking at here is what we're seeing on a weekly basis. A bit of a divergence. On RSI, a bit of a divergence on stochastics. Higher lows. So what do we do? How do we trade this? How do we play this? When we don't have historical support immediately below, let's do this. Let's take the trend lines off and create our own trading channel. So here you have it. Here's our downtrend channel on a daily basis. If you're a trader, longer term, you're looking to invest in nat gas, you want to use a weekly chart or a monthly chart. But for a trader, for today's conversation, what we want to do is identify where we have immediate upper bands of resistance and immediate lower bands of support. Now what I want to do is create an alert. I want to know when we break through the upper band of resistance on a daily basis, because when I write daily basis, that tells me it's a short-term swing trade and a possible long on a retest. What does that mean? I am not all that confident in this chart at current. Why? Because the path of least resistance remains to the downside. No doubt about it. So I want to see a breakout, and not only a breakout, I want to see a confirmation pullback and a retest. What does that tell me? It tells me that what is at current resistance will now act as support, assuming that it holds the retest. It's at that point in time where I'll be interested in buying the UGAZ. Not until then, because it's weak, and weak stocks, ETFs, I don't care if it's the price of a cupcake, weak prices tend to get weaker because that is the trend. Moving on to the ITA. I want to go to a weekly chart here to get that higher level view. Now, this is a pretty setup, but it's not ready to be bought yet. Soon. Because don't forget, this is the U.S. aerospace and defense iShares, and the military industrial complex is not going to be denied their pound of flesh out of federal tax revenues. They will go higher. Now, what I want to take a look at first here, given this is a pretty chart with no support and resistance levels on here, I want to see on a weekly basis where I have support and resistance above. Using a heat map, I could see that I have a congestion area here of potential buyers below. That's a good sign. Now, using automated trend lines, I could see that I have immediate resistance above, and it is rising. Now to a daily chart, these are daily trend lines, and you can see that we closed out the day yesterday just shy of an upper band of resistance. When is it all clear to go buying the ITA? I think it's a safe bet to begin buying the shares, not at resistance, but at a higher price, above this resistance level here at the 220.50 level. If we break out and close above that level, that puts us at a new 52-week high. Actually, 220.60 is a 52-week high. Let's use that price. We want to see a close above that resistance level. And then we can anticipate that our next upper band of resistance will be this trend line here, which is rising. It'll act as a rising ceiling for the share price. So the ITA is looking good as a potential long trade, assuming that we see a display of strength. Not before then. Too much resistance immediately above. Now the USLV. The USLV, let's get these trend lines off. Let's first take a look at a macro view, a higher level view of where we've been. And we were long throughout this rally here. We sold, I believe, here as we pierced the third standard deviation Bollinger Band. And you can see that our trend lines are, in fact, rising not only on price, but RSI, Stokes, they're all looking very good. The problem here with the USLV, silver, whatever you want to trade here, if you're risk adverse, that's fine, I get it. The only problem I see here is that we have a lot of overhead supply as seen here at this upper band of resistance. That doesn't mean it can't move higher, but we may remain range bound for a short period of time as we work through all these buyers who are looking to get made whole after sitting through this vicious downtrend. Daily chart. All right, so we gapped up higher here on the 7th. We pulled back a bit. We did not chase the gap. I think that we're probably going to fill the gap. So let's allow for a pullback here. You can see that on RSI, we broke out. We're retesting right now. And what I want to point out is I just brought up on a daily chart. This is a daily chart. However, with TrendSpider, I'm able to toggle and overlay weekly resistance. And when you have a primary chart being daily and you're using a secondary time frame for support and resistance, it appears in dashed line. If you're using daily trend lines on a daily chart, those lines appear solid. Let's take the daily trend lines off. Now, what we did earlier in the week is that we gapped up higher and above weekly resistance only to pull back and at current trade down below weekly resistance. Now, that just goes to show you that you have sellers above, and you can see that the line I drew on a weekly basis representing resistance is reflected on this daily chart, and it's acting as resistance on a daily basis as well. So you can see that the chart functionality here is outstanding. It's a time saver. And I'm looking for a pullback here. Now, if we close above on a weekly basis, this upper band of resistance in green, that's fairly bullish. But again, we do have resistance above at the 92.25 level. So let's just be forewarned. I'd like to see either a pullback to this lower band of the rising uptrend channel or a close above 87.60 to nibble on a trade, and then add more aggressively on a rally and a close above on a weekly basis above 92.25 as we fight through the upper band. Back to the weekly chart. As we fight through this resistance. And this new dashed line here is not a weekly view. It defaulted to a monthly overlay because the system is recognizing that while I want to toggle between different daily, weekly, monthly charts, it's recognizing that I want to also leverage the power of using support and resistance levels from different time frames onto that particular chart. Now, as we're looking at this right now, you can see that this is defaulted to a monthly overlay while I'm using a weekly chart, and we have a resistance above at around 96.03. So on a monthly view, we have a bit more resistance above, but it becomes a bit more challenging to move higher as we hit that resistance level because professional traders have this technology. Now it's available to you. So if you want it, it's free to those who sign up for the Contrarian Trader as a silver or gold level member. Or if you're not ready for that yet, that's cool. Simply click the link, take advantage of their 7-day free trial offer. Use discount code CT25Z. Everybody have a profitable trading day. I'll talk to you over the weekend. Be well.